Hey everyone, welcome back. Today we're going to do a deep dive into contrarian trading.
Oh, yeah.
You know that art of zigging when the market zags?
Right.
You sent over some audio from economist and trader Carl Futia,
Yeah.
specifically a lecture where he's breaking down his book, The Art of Contrarian Trading.
It's a great book.
Yeah,
Yeah.
really is. So you're clearly no stranger to the basics here.
Right.
So our goal today is to really pull out those actionable insights from Futia's experience, the
Yeah.
stuff that takes you from, knowing about contrarian trading to actually spotting those potential opportunities.
Yeah, I think Futia really delivers on that practical side.
Okay.
He's not just laying out theory.
Yeah.
He's giving you the tools and the real-world examples to put that contrarian thinking into action.
Exactly. And he starts off strong right out of the gate talking about bearish information cascades.
Yeah.
So for someone already familiar with contrarianism,
Uh-huh.
how is Futia's take on this unique?
Well, I think he highlights a nuance that many miss. It's the difference between a bearish economic outlook
Right.
and a bearish stock market.
Okay.
Just because the economy is gloomy doesn't mean the stock market is about to tank.
Got it.
Futia is looking for that shift where the negative sentiment
Okay.
specifically targets the market itself.
So how does he track that shift?
Yep.
Is he poring over, economic reports,
Right.
looking at consumer confidence numbers?
He actually uses what he calls a media diary.
Okay.
Imagine tracking newspaper headlines, magazine covers, even late night talk show jokes.
Really?
Yeah, Futia is looking for that tipping point where the media narrative goes from general economic doom and gloom to a laser focus on the stock market woes.
That's so fascinating.
Yeah.
So he's not just reading the news, he's like analyzing the tone of the news as a gauge for market psychology.
Exactly. It's about understanding the mood of the crowd
Uh-huh.
and recognizing that the crowd is often wrong, especially when it comes to market timing.
Okay, so we're watching for this shift in media sentiment, right? This wave of negativity crashing onto the stock market.
Right.
Then what?
Yeah.
How do we actually trade on that?
Well, Futia presents two main approaches,
Mm-hmm.
the conservative and the aggressive.
Okay.
So let's say we're watching the S&P 500
Uh-huh.
and we see that bearish information cascade starting to build.
Got it.
Right.
I'm picturing the headlines getting, increasingly dramatic.
Right, exactly.
So what is a conservative contrarian doing at this point? Are
Mhm.
they ready to back up the truck and buy?
Not so fast.
Okay.
They're looking for a significant drop in the S&P 500.
Okay.
Let's say, a certain percentage below its 200-day moving average.
Mm-hmm.
But even then, they're not jumping in right away.
It's not just about buying when things are cheap.
Right.
There's more to it than that.
There's a nuance there.
So what's the signal that they're waiting for?
They want to see that 200-day moving average turn upward,
Okay.
at least by 1%. It's an indication that the downward trend is reversing,
Got it.
and that's when they start increasing their stock allocation.
So even with a major market dip
Yeah.
and all these, bearish headlines,
Right.
a conservative contrarian is playing it cool,
Yeah.
waiting for that confirmation.
Patience is key.
Patience is key.
Absolutely.
Got it.
They'd rather miss out on some gains than risk big losses by buying prematurely.
Makes sense.
Futia uses the 2000 to 2003 period right after the dot-com bubble burst as
Yeah.
a prime example.
Okay, so even with the S&P 500 significantly down from its peak,
Uh-huh.
the conservative contrarian is holding back.
Yes.
When do they finally jump in?
Not until June of 2003,
Okay,
when that 200-day moving average finally turned upward.
got it.
That patience would have put them in a great position to ride the market recovery that followed.
Oh, wow.
Yeah.
That's a great illustration of how that discipline can really pay off.
It really can.
But what about those who don't have the patience to wait for that perfect moment? Let's talk about the aggressive contrarian.
Now we're getting into the realm of more active trading.
Okay.
An aggressive contrarian is looking for those shorter-term swings within the overall trend.
Uh-huh.
They're not just watching that 200-day moving average.
Right.
They might be using a 50-day moving average.
Yeah.
And they're monitoring the media even more closely.
So they're trying to time those smaller waves,
Exactly.
not just the overall tide.
Yeah.
How would that have played out in that same 2000 to 2003 period?
Well, they would have seen several opportunities to increase their allocation during those brief but powerful rallies.
Okay.
Even in a bear market, there are upswings.
Right.
And an aggressive contrarian is trying to ride those.
But wouldn't that be incredibly risky? I mean,
Mhm.
what if they buy in and the rally fizzles out?
That's the trade-off.
Okay.
They're accepting more risk,
Uh-huh.
but for the potential of higher rewards.
Got it.
And Futia emphasizes this approach requires constant monitoring and adjusting. It's like a surfer riding a wave.
So you need a certain level of comfort with risk to be able to pull off that aggressive approach.
I think so.
Yeah.
Yeah.
For someone just starting out with contrarian trading,
Uh-huh.
would you say that sticking with that conservative approach
Yeah.
might be a better way to kind of learn the ropes?
Absolutely.
Okay.
It's a way to get a feel for that contrarian thinking without taking on too much risk right away.
Okay, so we've got these two approaches, right? Conservative and aggressive.
Right.
But how does this play out with individual stocks?
Yeah, that's a good question.
Futia uses the Google IPO in 2004 as a case study.
Right.
What makes that such a good example of contrarian thinking in action?
Well, it's fascinating because even Google,
Uh-huh.
a company that seems like a sure bet in hindsight,
Right.
faced a wave of skepticism leading up to its IPO.
Really?
Oh, yeah. There was tons of negative media coverage,
Wow.
questioning their valuation, questioning their future prospects.
So even with a company that ultimately, became a massive success, there are these contrarian signals.
Exactly. Remember, contrarians are looking for undervalued assets.
Right.
And sometimes those assets are hiding in plain sight, masked by negativity and doubt.
Oh, wow.
The Google IPO was a prime example of that.
It's a great reminder that crowd psychology can impact even the most promising opportunities.
It really can.
Sounds like you need to be able to see past the headlines and trust your own analysis.
Absolutely.
Yeah.
And that's what Futia demonstrates so well.
Okay.
He's not just blindly opposing the crowd.
Uh-huh.
He's using his own framework, his own tools
Right.
to make independent judgments.
That's such a key point.
Yeah,
Contrarian trading isn't about being stubborn or contrary for its own sake.
right.
It's about having the confidence to form your own opinions.
Exactly. And that's what makes it so fascinating.
Yeah.
It's not just a set of rules.
Right.
It's a way of thinking,
Yeah.
a way of approaching the world.
Okay. So we've laid the groundwork here.
Yeah.
Understanding those bearish information cascades and how both the conservative and aggressive contrarians might approach a market downturn.
Right.
But Futia doesn't stop there.
He doesn't.
He dives into these specific market events,
He does.
using them to illustrate his strategies in action.
Right. And that's where it gets really interesting.
Yeah.
He goes beyond the theory and shows us how to apply these principles in the real world, using his own experiences as a guide.
And that's exactly what we're here for. So let's dive into those examples.
Let's do it.
And see how Futia navigated some of the most tumultuous periods in recent market history.
Sounds good to me.
Perfect. All right, we're back and ready to dive into some real-world examples of contrarian trading in action.
Yeah.
We left off talking about, the importance of independent thinking.
Right.
So let's see how that plays out as we walk through some major market events, starting with the housing bubble of the mid-2000s.
Yeah. This is where Futia's media diary technique really shines.
Okay.
He started noticing warning signs in the media well before the bubble actually burst.
Right.
Even as prices were skyrocketing.
So amidst all the hype and the excitement,
Yeah.
there were cracks starting to show.
Yeah, there were subtle signs.
What kind of signs was he picking up on?
Well, he points to specific magazine covers
Mhm.
from publications like Fortune and Time.
Okay.
They weren't explicitly bearish,
Yeah.
but they did highlight the speculative frenzy around real estate,
Right.
the kind of exuberance that makes a contrarian raise an eyebrow.
It's like those covers were inadvertently revealing the underlying anxieties,
Yeah,
even as the market was still booming.
exactly. And for a contrarian, that's a signal to start digging deeper,
Okay.
to question, whether the fundamentals justify the hype.
So how would a contrarian trader armed with this insight have navigated that housing bubble?
Right.
Were they shorting the market,
Yeah.
betting against the rise?
Not necessarily.
Okay.
A contrarian approach could involve simply avoiding real estate altogether during that period.
Okay.
Remember, it's not always about making a bold bet.
Right.
It's often about recognizing when to step aside and preserve capital.
That makes sense.
Yeah,
It's about recognizing when the risk outweighs the potential reward.
exactly.
But let's be honest, even if you sidestepped the housing bubble, the fallout from its collapse was pretty hard to escape.
It was.
I'm talking, of course, about the 2008 financial crisis.
Right, absolutely.
Yeah.
The 2008 crisis was a global event.
Yeah.
Virtually no market was immune.
Right.
But Futia argues that contrarian traders,
Okay.
whether conservative or aggressive,
Uh,
would have been better equipped to weather the storm.
what gave them that edge?
Yeah.
Was it just that they were less exposed to the housing market?
It goes deeper than that.
Okay.
They were already attuned to those signs of excess,
Okay.
those bubbles forming in the market.
Right.
They were also more likely to have a disciplined approach to risk management,
Uh-huh.
which is crucial in a crisis.
So they weren't just lucky. They
Oh.
had a mindset and a set of tools that helped them navigate that turmoil. But let's get specific.
Okay.
What would those tools have been telling them in the months leading up to the crash?
We remember those crystallizing events we talked about.
Yeah.
Those moments where the market's worst fears are confirmed.
Right.
Well, 2008 was full of them.
Yeah.
The failure of Bear Stearns in March was a major wake-up call,
Mm-hmm.
signaling that the mortgage crisis was far more serious than many had realized.
Right. That was a huge moment.
It was.
It felt like the ground was shifting beneath everyone's feet.
Exactly. And for a contrarian trader, those are moments of intense observation.
Okay.
They're not just reacting emotionally.
Right.
They're watching how the market is responding, looking for those wild swings in sentiment that can create opportunities.
So even in the midst of a crisis,
Yeah.
there are still contrarian plays to be made.
Yes, but it requires a certain level of mental fortitude.
Right.
You're not just buying when things are on sale.
Uh-huh.
You're buying when it feels like the world is ending. That's where discipline and a deep understanding of market psychology are essential.
It takes a special kind of investor to stay calm and rational
Yeah.
when everyone else is panicking.
Right.
But Futia seems to suggest that this isn't some innate talent.
Right.
It's a skill that can be developed.
He dedicates a significant portion of his book to the psychology of crowds,
Okay.
arguing that understanding how fear and greed drive irrational behavior
Uh-huh.
is essential for successful contrarian trading.
So it's not just about crunching numbers.
What?
It's about understanding human nature,
It is.
recognizing those patterns of behavior that repeat themselves throughout history.
Exactly. And that's what makes contrarian trading so fascinating.
Yeah.
It's a blend of data analysis,
Mm-hmm.
market observation,
Yeah.
and a deep dive into the psychology of crowds.
Speaking of market observation,
Yeah.
Futia has that unique approach with his media diary.
Right.
He's not just reading headlines.
Mhm.
He's analyzing magazine covers like they're ancient scrolls revealing hidden messages.
He's looking for those covers that convey a strong emotional message,
Okay.
whether it's bullish or bearish.
Right.
It's not just the headline.
Okay.
It's the imagery, the colors, the overall tone.
Right.
He's reading between the lines
Yeah.
to gauge that underlying sentiment.
It sounds almost like art criticism applied to financial markets.
That's a great way to put it.
Can you give us an example of how he decodes these covers?
Well, he talks about the New Yorker cover from February 2008,
Okay.
the one with Humpty Dumpty sitting precariously atop the New York Stock Exchange.
Oh, I remember that one.
Yeah.
It was definitely unsettling.
It was.
But what was Futia's interpretation?
He saw it as a clear warning sign,
Okay.
a foreshadowing of the market turmoil to come.
Right.
Humpty Dumpty, of course, had a great fall.
Yeah.
And Futia saw this cover as a sign that the market was headed for a similar fate.
Wow. That's some next-level media analysis.
Yeah.
It sounds like he's tapping into the collective unconscious of the market.
That's a great way to put it.
By understanding the psychology of the crowd as reflected in the media,
Right.
a contrarian trader can anticipate those big shifts, those moments when the narrative starts to change.
Exactly.
This makes me think about those times when you read a news article
Yeah.
and it feels like everyone is jumping on the same bandwagon,
Mhm.
whether it's about, a hot new stock or an entire sector.
Right.
It's almost like you can feel that herd mentality building.
That's exactly what Futia calls a bullish information cascade.
Okay.
It's the opposite of the bearish cascade we discussed earlier.
Uh-huh.
It's that surge of positive news and optimism that can inflate a bubble.
And for a contrarian trader, those bullish cascades are danger zones, right?
They can be.
It's a sign that the market might be getting ahead of itself driven by emotion rather than fundamentals.
Exactly. It's a time to be extra cautious,
Okay.
to scrutinize the narrative,
Uh-huh.
and to look for those cracks in the facade.
Futia then takes us back to the housing bubble
Yes.
and points out a fascinating parallel. He noticed that even as home prices were soaring,
Uh-huh.
there were magazine covers questioning whether the boom was over.
Right. It's another example of how media sentiment can be a leading indicator.
Wow.
Even though prices were still going up,
Mm-hmm.
there was a growing sense of unease, a feeling that things couldn't last forever.
Yeah.
A contrarian trader would have picked up on those subtle shifts in the narrative.
It's like they have a sixth sense for market sentiment,
Yeah.
an ability to hear those whispers of doubt even amidst the roar of the crowd.
That's a great analogy.
And Futia argues that this sense isn't some mystical gift.
Right.
It's about paying attention, being observant, and questioning the prevailing narrative.
Exactly.
So it's a skill that can be honed, a muscle that can be strengthened.
Absolutely. And that's what makes contrarian thinking so empowering.
Yeah.
It's not about blindly following the crowd.
Mm-hmm.
It's about developing the tools and the mindset to make your own judgments.
Okay, so we've seen how contrarian thinking can help you navigate both bullish and bearish markets.
Right.
But Fuchsia takes it a step further.
He does.
He talks about identifying the investment crowd
Yeah.
and understanding how their behavior influences market trends.
Right.
Can you unpack that for us?
Yeah, he's referring to those groups of investors who share a common belief or outlook
Uh-huh.
and whose collective actions can have a significant impact on the market.
So it's not just about individual investors making decisions.
Right.
It's about understanding the dynamics of these larger groups,
Yeah.
these herds that can move the market in one direction or another.
Exactly. And during the dot-com bubble, for example,
Okay.
the investment crowd was those who believed that internet companies were the future.
Right.
Regardless of their actual earnings or profitability,
Yeah.
their enthusiasm, their collective buying power, drove prices up to unsustainable levels.
And when the bubble burst, it was that same crowd,
Right.
now driven by fear, who
Yeah.
rushed to sell, sending prices crashing down.
Exactly.
It's like a feedback loop driven by the emotions of the crowd.
Exactly. And for a contrarian trader, the key is to recognize these patterns,
Okay.
to identify the investment crowd and understand their motivations.
Right.
Are they driven by hype,
Mm-hmm.
by fear, by greed?
Right.
Are their beliefs aligned with the underlying fundamentals?
It sounds like this is where Fuchia's media analysis comes full circle.
Yeah, it does.
He's using those headlined as magazine covers to get a sense of what the investment crowd is thinking and feeling.
Precisely. He's looking for those patterns in the media narrative that reveal the crowd's dominant emotions.
Yeah.
It's like taking the temperature of the market's collective psyche.
And by understanding the crowd's psychology,
Right.
a contrarian trader can anticipate their next move, right?
Yes.
It's about staying one step ahead.
That's a great way to put it.
It's like a game of chess,
Uh-huh.
where you're trying to anticipate your opponent's moves.
Right.
In this case, your opponent is the market.
Yes.
And the key to winning is understanding the psychology of the crowd.
Yep.
This is all starting to make a lot of sense.
Good.
But I'm curious. We've talked a lot about how to spot those danger zones, those moments when the crowd is getting ahead of itself.
Right.
But what about those times when it might actually make sense to follow the crowd,
Yeah.
to go with the flow?
Right.
When would a contrarian trader consider doing that?
Well, even the most diehard contrarian recognizes that there are times when the crowd might be right.
Okay.
The key is to be discerning, to understand the underlying reasons behind the crowd's behavior.
So it's not about blindly opposing the crowd.
No.
It's about thinking critically,
Yeah.
about understanding the forces at play
Ah.
and making a judgment call.
Exactly. A contrarian is not simply someone who disagrees for the sake of disagreeing.
Right.
They're someone who is willing to think for themselves, to challenge assumptions, and to make decisions based on their own analysis, even when it means going against the grain.
Uh-huh.
But they're also willing to acknowledge when the crowd might have a point, when the consensus view is actually aligned with the underlying reality.
It's about striking that balance
It is.
between independent thinking
Uh-huh.
and recognizing when the crowd might be onto something.
Absolutely. And that balance is crucial for success in any market,
Yeah.
whether it's stocks, bonds, real estate, or anything else where crowd psychology is at play.
This has been incredibly insightful.
Oh, good.
We've covered so much ground,
We have.
from the psychology of crowds to the art of media analysis.
Yes.
It's clear that contrarian trading is more than just a set of rules.
It
It's
is.
a way of thinking, a way of approaching the world.
I couldn't agree more. It's about questioning assumptions, trusting your own judgment, and having the courage to act on your convictions even when they go against the grain.
And speaking of going against the grain,
Yeah.
Fuchsia doesn't shy away from the challenges of contrarian trading.
No, he doesn't.
He reminds us that it's not a get-rich-quick scheme,
Right.
but a long-term strategy that requires patience, discipline, and a willingness to stand apart from the crowd.
He makes a really important point about the psychological aspect of contrarian investing.
Okay.
He says that the biggest challenge isn't identifying opportunities,
Mm-hmm.
but having the courage to act on those opportunities,
Right.
to buy when everyone else is selling,
Yeah.
or to sell when everyone else is buying.
It's about trusting your gut, even when your gut is telling you something different from everyone else.
Exactly. And that's where the true test of a contrarian lies.
Yeah.
It's not just about having a different opinion.
Uh,
It's about having the conviction to act on that opinion, even when it feels uncomfortable or even scary.
that's a powerful message.
It is.
It's about developing that inner strength, that resilience to stand firm in your beliefs, even when the world seems to be telling you you're wrong.
And that's what makes contrarian trading so rewarding,
Yeah.
both intellectually and financially.
Yeah.
It's about developing the confidence to trust your own judgment, to chart your own course, and to potentially reap the rewards of seeing the world differently.
This has been such an eye-opening conversation.
Oh, good. I'm glad.
We've delved into the nuances of contrarian thinking, exploring how it applies not just to trading,
Right.
but to decision-making in all aspects of life.
It's been a fascinating journey, and I hope our listeners have gained valuable insights into this powerful approach to investing and to life itself.
Before we wrap up part 2, I have to ask, what's your biggest takeaway from our deep dive into Futia's work?
You know, for me, it's the reminder that contrarian thinking is a continuous process
Right.
of learning, adapting, and refining your approach. It's not about being right all the time,
Right.
but about constantly questioning, observing, and seeking out those contrarian signals that others might miss.
That's such a great point.
Yeah,
It's not a destination, but
Right.
a journey of continuous learning and growth.
exactly. And I think that's what makes it so exciting.
Yeah.
There's always something new to discover, always a different perspective to consider, and always the potential to gain an edge by thinking differently.
Well said. All right, let's take a quick break. And then we'll come back for part 3 to explore some of the historical figures who've shaped the world of contrarian thinking
Yeah.
and how those lessons can be applied to the markets today. We're back for the final part of our deep dive into contrarian trading, and I'm really excited about this next section.
Oh, yeah.
Yeah, Futia takes us on this fascinating historical tour, introducing us to some of the pioneers of contrarian thinking.
Okay.
It's like tracing the lineage of this investing philosophy, you know?
It is, yeah.
What struck me is how these individuals were challenging conventional wisdom decades ago,
Uh-huh.
long before contrarian investing became like a recognized strategy.
Right.
They were true trailblazers, developing their own unique approaches to market analysis.
Yeah.
Makes you wonder, what were they seeing that others weren't? Were they just naturally contrarian, or did they develop this mindset through experience?
The Futia highlights Humphrey B. Neal,
Okay.
who wrote the classic book Tape Reading and Market Tactics back in the 1930s. And Neal emphasized the importance of understanding crowd psychology
Okay.
and recognizing those moments when the market's emotions were driving prices to unsustainable levels.
That's so interesting. It seems like this awareness of crowd psychology has been at the heart of contrarian thinking.
From the very beginning.
Yeah, from the very beginning.
Absolutely.
So interesting.
And another key figure Futia introduces is Garfield Drew,
Okay.
who in the 1940s developed a system for measuring market sentiment based on the ratio of new highs to new lows in stock prices.
Oh, wow.
He recognized that when this ratio reached extremes,
Huh.
it often signaled a turning point in the market.
So he was essentially using data to quantify market sentiment,
Exactly.
to identify those moments when the crowd was getting overly bullish or bearish.
Exactly.
That's brilliant.
It is. And what's remarkable is that many of these early contrarians achieved impressive results,
Really?
consistently outperforming the market by going against the grain.
Wow.
It really underscores the power of independent thinking, of being willing to see the world differently.
It's inspiring in a way.
Yeah.
These were individuals who didn't just accept the conventional wisdom,
Right.
they challenged it.
They did.
And in doing so, they found a way to gain an edge.
Absolutely. And Futia then brings us to a more recent figure,
Okay.
Paul Montgomery,
Okay.
who takes media analysis to a whole new level.
Right. We talked earlier about Futia's media diary, but Montgomery really systematized this approach.
He did.
Didn't he spend years analyzing Time magazine covers?
He did. Montgomery meticulously studied decades of time covers,
Wow.
looking for patterns, for those subtle visual cues that might foreshadow a market turning point.
Okay, I'm on the edge of my seat here. What did he find?
He noticed that covers featuring a strong bullish sentiment,
Okay.
those celebrating, a booming economy or a soaring stock market,
Uh-huh.
often coincided with market peaks.
Really?
Conversely, covers, conveying a bearish outlook.
Okay.
Those depicting economic turmoil or market crashes
Right.
often preceded market bottoms.
So it's like the media, in its attempt to capture the zeitgeist,
Right.
was inadvertently revealing the crowd's extreme emotions,
Exactly.
those moments of peak euphoria or despair
Yeah,
that signal a shift in the market's direction.
exactly. Montgomery was essentially using popular culture as a barometer for market sentiment.
That's amazing.
And while it might sound unconventional,
Yeah.
it's a testament to his creativity and his deep understanding of crowd psychology.
It's a great reminder that contrarian signals can come from unexpected places.
They can.
You just have to be willing to look for them,
You do.
to see the world through a different lens.
Absolutely. And Futia encourages us to do just that.
Okay.
He challenges us to think about how these principles of contrarian thinking can be applied beyond the stock market.
That's a great point. We've been focusing on stocks.
We have.
But these principles seem applicable to any market where crowd psychology plays a role.
Exactly. Think about real estate commodities, collectibles, even cryptocurrencies.
Wow.
Wherever you have a crowd of investors driven by fear and greed, you have the potential for contrarian opportunities.
It's about recognizing those moments when the crowd is getting carried away,
Right.
whether it's by exuberance or panic,
Yes.
and then having the discipline to act independently to make your own judgment based on the fundamentals.
Precisely. And Futia also reminds us that contrarian thinking isn't just about making money.
Right.
It's about making better decisions in all aspects of life.
Oh, that's a good point.
It's about challenging assumptions, questioning the status quo, and being willing to consider alternative perspectives.
It's about being an independent thinker.
It is.
Someone who doesn't just follow the herd, but charts their own course.
Exactly. And on that note, I'd like to leave our listeners with a final thought,
I love it.
something to ponder as they continue their own exploration of contrarian thinking.
Give us that final thought-provoking question.
In a world where information travels at the speed of light and everyone has an opinion, how can we cultivate the discipline to pause, to reflect, and to truly think for ourselves?
Wow.
That, I believe, is the essence of contrarian thinking and the key to navigating the complexities of the modern world.
That's a fantastic question and a perfect way to wrap up our deep dive into contrarian trading. A huge thank you to Carl Futia for sharing his insights, and to you, our listener, thank you for joining us on this journey. We hope you've learned something valuable that will help you navigate the markets and the world with a little more confidence and a lot more contrarian spirit.